Hi, Yuki. Thank you so much for coming to the Investor Talk. How are you today?
I'm good. Thank you very much for inviting me.
Thanks for coming from Tokyo. So we are very excited today. Before we start talking about how venture capitalists and angels invest money, would you like to give an introduction to yourself?
Sure. So I'm a lawyer by trade. I'm an angel investor, and then also I organize an angel syndicate called Yakumi.co out of Japan. It's a platform of angel investors, mostly based in Japan, but also some are based outside of Japan, and they are. Going to form a syndicate if we are collectively interested in investing in a startup. So we have done collectively 50 investments, as angel investors, and I've been also an advisor to startups, and I currently am the operator at one of them as well, which is a deep tech startup out of Tokyo. So I've been in the startups ecosystem for a long time, and I've been playing multiple roles, but I've been an angel investor for the longest.
That's great. Lovely. Let's talk a bit more about how investing money. In which sector, stage, and geography do you prefer to invest?
So, because I'm Japanese and I'm based in Tokyo, and then my angel platform, provides a lot of advice to Japanese startups. So, Japan is definitely the strongest geography, I would say. But that said, we have invested in other geographical regions in the U.S., Singapore, as well as Europe.
Yeah.
So we don't have, like any bias or preference of geographic regions, except that we're very good at Japanese startups in terms of understanding and, for growth opportunities and then risks. And then we invest usually at early stage companies. So from seed to Series A, and because of the side check size.
And how much do you normally invest in terms of check size?
Right. So it varies from startup to startup, but generally we invest from between 50 grand in US dollars to the highest amount we have invested is $500,000. So that was a syndicate, and then we had about 20 angel investors into the SPV, a special purpose vehicle, to invest into one startup. So it varies really.
You invest very early, seed, maybe even pre-seed stage, up to A
Yep.
round. What are the top concerns? Where do you find conviction when investing? What do you look at the most? The company, the team, the product itself?
Right. So if it's pre-seed, the team is all they got generally. So I have to trust, whether the team members, the co-founders, founders are, the experts in the domain that they're, operating. First of all, and then also like the founders' personalities, and then the willingness to change, but stick to what they would like to do. Because when you have a vision at pre-stage, the things will change. There are a lot of factors beyond your control, and then you would need to pivot, whether you like it or not. So you need to have persistence, but also at the same time flexibility. So I like to see the personalities of the founders.
I do agree. Team is absolutely everything when it comes to the very early stage.
Right.
You're right. They only got the team actually at the very
Yeah,
beginning.
exactly.
How important is face-to-face meeting, face-to-face the founders when it comes to investing? Are you confident enough to do an entire process, including making the payment, everything online?
Yes, I have. So we have invested in a few startups without, meeting in person at all. So it's not that we would need to have a face-to-face meeting, but obviously face-to-face meeting will be very helpful in terms of, understanding each other. And like I said, the founder's personality show up in in the demeanors, or the body language and like whatnot. And then sometimes it's really hard to read a clue when you're talking online. So it's definitely helpful, but it doesn't mean that it will never happen, or it has never happened, because it did. But if it's only online, we would need to have multiple rounds, and probably not just one video meeting, and then we will invest. And then sometimes they will ask us to do that, but we sometimes need to pass, because we just don't have enough data points to make a decision. um,
How often do you like to meet founders before and after having invested?
Oh, after we invested, we like to follow up as much as possible. So we like to be very helpful. So I offer my advisory to a lot of startups I invested in, as as their legal advisor, or financing advisor, or other capacities. And then some startups have engaged me. So that's one way. And then we also, like, I also informally I advise them, and then try to meet in person if they are in Tokyo. And then if they are outside of Tokyo, I regularly have online meetings and whatnot. And then before the investment, usually I would say 2 or 3 meetings is sufficient.
I mean, as you work in very early, when it comes to the next round, are you going to help startups to raise funds?
So next round is like a Series A, Series B.
Yeah, but also, let's say they need to raise
Mm.
more money. Are you going to help them with your network to raise more money outside
Oh,
the
I
VC?
see, I see. So, like, usually, like Series A, B, depending on the industry, dependent geography, the tech side becomes so big that we cannot fill the entire round. So we would need to introduce our venture capital friends most of the time. And then, for example, in Japan, I have a network of, you know, um, 30, 40 venture capitals that I can talk to by text or over the call super easily, because I've been in the startup ecosystem for a long time. That I know a lot of GPs. I would say 30, 40 GPs, and then I can call them up, and then I can email them, and then I can introduce those startups to those venture capitals, and then we take it to the next level.
I mean, there are some VC, especially corporate VC, they like that the portfolio has they have some kind of interaction itself.
Mhm.
Do you have something similar in your portfolio? I mean, do you expect your investments playing together and somehow help each other, working together?
Yes, that's a good question. Because we are kind of industry agnostic, so I have invested in a lot of different kinds of industries, and I look at the founders, I look at the market, I look at the team and whatnot, and then I decide to invest. And so as a result, there are so many different kinds of industries that I have invested in. So not all portfolio companies have necessarily anything in common to collaborate, or to help each other in terms of like a business wise, like to increase revenue and whatnot. But at the same time, all the founders have like similar you know problems they face when it comes to hiring, when it comes to fundraising, like sales growth and blah blah blah. So yeah, I tend to organize like the parties or the meetups, and then make the founders mingle with each other, and then help each other emotionally and morally, and all that. So those things happen a lot. And then in few cases, I connected two startups I invested in, and they formed sort of like a business alliance, and it became actual revenue generating opportunity for both of them. So that worked really really well. But that, I would say, that's kind of uncommon.
Thank you. I mean, you have been mentioning before, which is I do agree, pivoting is a big deal. What's your suggestion to founders when it come the time to pivot comes and they need to pivot because otherwise maybe they will fail. But because many of them they perceive pivoting like a failure.
Right. So I think that's a very tough decision that the founders need to make because founders usually have a vision or have a goal, have a conviction. This is going to work and this is what I want to do. And then, after, a short time period or a long time period that they realize that this might not work, and so it's very emotional decision making for them, and then I need to, like, make it easy for them, and then they also need to accept the fact that they need to pivot. So um I think, like I said, I think the persistent flexibility are like sort of like opposite ends of spectrum, but at the same time the two qualities can't coexist in one person or the founder teams. So if the founders are persistent but flexible enough to pivot, those time come, I think.
Why do you become an investor?
Good question. So I've been interested in startups. I'm very passionate about startups from early on. So I started up my own company with two engineers like a long time ago, which failed. And then I went to a business school and then also law school and then became a corporate lawyer. And so as soon as I, have enough, savings to invest, the startups are the first and foremost asset class that came to my mind. I'm not like a fixed income or equity or bonds and whatnot. I just I'm very interested in startups. I just wanted to help them. They are very passionate, exciting, and then they're trying to change the world for the better, and then I feel the same way, like I would like to make a difference through my actions. So it's very risky asset class, and I don't think from the financial perspective I'm making the reasonable informed decision in terms of risk allocation, but that's what I've been invested and interested in.
I agree. I mean, I cannot agree more. It's very exciting, very risky, but
Yeah,
very rewarding as well, and so much
exactly.
pleasure. Which are the critical points that trigger your decision to invest? Let's say you had three similar startups.
Mhm.
What to make
So, it's very difficult, and then it is more art than science. And I have invested in startups that failed, and I have invested in startups that I was, initially skeptical that grew so much, so it became, $30 million valuation, over the course of 4 years. So it's really difficult when it comes to like actual decision making, and then I have still not proven myself that I'm a great angel investor. But I just have to trust my gut feeling, and then I would just go with what I think is the right decision. And like I said, like so I don't know what kind of similarities you're talking about, but the social impact, for example, is very important to me. So if the company is financially attractive and then seem really good, and then like the founders, but the product itself is something like the SaaS of like a commonly available product, I wouldn't be interested so much So as compared to, for example, one of the portfolio companies of mine is Finless Foods, but they've been growing like a plant-based fish meat, as well as the lab-grown, cell cultured fish meat. And then I'm the only and the initial first investor as an individual, and then I've known the founders for 6 years, and then at the time they were just kids out of college, and just wanting to change the world for the better. And then they knew that fish going to be extinct at this pace of you know the the consumption, and then they saw an opportunity. And then for the first 4 or 5 years they've been focused on research and development with no revenue. Right. So it was a moonshot investment, but they've been really successful, for example. So it's really hard, but I believe in social impact in the long term. So something that probably change the world in the long term future. I would like to bet on it.
What is a perfect recipe for a great pitch that can convince you?
So the pitches are important, but sometimes I feel most pitches are a bit cookie cutter, like as in you start with the problem and then solution. What's the market, and then this is a team, and then blah blah blah. So I've seen I would say at least hundreds of them, and maybe more than 1,000 pitches. And I would say more than half of them, a majority of them are, very similar, storyline, starting from the problem, and then, this is a pain point. I would certainly, and then, I'm not saying that that is bad, but it's more, especially at the, pre-seed or seed stage. I think that the founders, like, what they would like to do, what they want, what they're passionate about, and why they started this startup, and where they're headed, like those kind of things, like very qualitative, and not necessarily like oh, total addressable market, or the financial projection in the next 5 years, but I think those are more important to me. So the pitch can be done in any way. So I'm not saying that a problem solution slide is bad. That's very easy to understand and follow for a lot of investors, including myself. Especially the domain is like very foreign to me. But it's also it's not either negative or positive. So it's hard. Like I've never seen a pitch that like itself convinced me to invest.
It's difficult. It's absolutely difficult.
Yeah.
What's your suggestion to funders when approaching venture capitalist angels? How they should approach them?
Uh, Sometimes it's like a happenstance. It's just warm introductions is always the best. Because if I get a text or email from a friend of mine, and who's trustworthy, successful, and whatever field that person is working in, it's hard to say no to a meeting for a coffee, right? So warm introductions is always the best. But at the same time, I've accepted a lot of cold calls and cold emails, and then responded, and then it became like a more than 100 grand investment. That's not uncommon either. And then also sometimes people email me, and then I was really busy, and I can't just respond, and I forget to reply. But after a week or two, just hey, I'm just following up, like blah blah blah. It's like, oh yeah, I totally forgot about this. And then and then read the deck, and they're like, oh, okay, maybe interesting. So let's have a call. And then we had a call, and then decided to invest. So I don't know, like I think it's like from the founder's perspective, I don't think they should just give up. by being ignored once, you just keep pushing. And then when you're said no, I think no means just no for now, or like no because I'm busy, or no, blah blah blah. It doesn't mean like no, like this business is gonna fail. No, you know what I mean. So like I think a warm introduction. Try to find them as much as possible, but if you can't, there's no other way to cold email, call, right? So do that, and then just follow up, and then even if you get ignored or said no, doesn't mean that nothing, like it means nothing. So I think that's how they should approach, in my opinion.
I mean, in terms of intellectual property, how important is for you to be?
It is very, very important to me. I've seen, as a lawyer, I've seen some cases where the founders fall apart, and then got into a dispute where the one of the founders starts a very competitive business, and then another founder claims that it's not a competitive business, so like I'm free to do whatever I want, even though there are like no compete clauses and like blah blah, but it's very, very tricky when it comes to startups, because the founders, the team, and people are the only assets they have. And then if the IP is does not belong to the company, like it's the founders take. So when I say IP, it doesn't mean that it's patents or trademarks or blah blah blah. It's more like the actual tech, like source codes or whatever, like like a secret sauce, whatever you do. So I think it's critical, to make sure the IP actually belongs to the company, not to the founders, or very ambiguously treated within the company.
Uh, where do you see the best big thing coming? Which are the most promising sectors in the years to come, in your opinion?
That's a $1 million or $1 trillion question. It's very difficult to reply, and then I think it depends on the geographical markets as well. So for example, I think the China and then India still see huge, significant growth in the middle class market. So there are a lot of B2C businesses. I see a huge potential in those markets, for example. But it's also very difficult for non-Chinese or non-Indian. Well, I mean, India is slightly different market, but like to start up and then enter and then grow. So depends on which markets are you're talking about. But generally speaking, I think I'm not you know the the profit here, but the space industry is obviously one of the industries that would probably grow. It's a new field. I'm a bit skeptical personally about metaverse, or the VR space, or cryptocurrencies. But you never know. I guess I'm a prophet, so like it could be the next big thing. But obviously, food and agriculture are the fundamental sector, and that can be improved significantly by technology. And then it's essential for human being survival, right? So I think that is sort of like a no-brainer. And then infrastructure to some extent. So there are a lot of sort of infra tech, that can help optimize the use of resources and materials and whatnot. So I think there are plenty of like sort of like a basic sectors that essential to human beings and survival. I think those industries are going to steadily grow.
Yuki, thank you so much for coming to the Investor Talk. It's been an absolute
Thank you
pleasure.
very much.
Thank you. Thank you so much. Take care.